thank you for joining us for today's webinar, Eliminate AP Fire Drills and Start Meeting the Needs of Your CFO, sponsored by Perceptive Software. My name is Shelly Gagne, and I'll be your facilitator for today. A few housekeeping notes before we get started. If you have any technical questions, please use the chat box and we will respond right away. If you have issues with audio sound, click the phone icon above the chat window to receive the teleconference information. To ensure quality, everyone's lines have been muted. Notes were sent to registered attendees prior to the webinar. I also entered the handout link in the chat box. We encourage you to ask questions throughout the presentation. Please type your questions into the chat box and hit send to submit them. At the end of the presentation, time permitting, we'll have presenters answer questions. If we're not able to get to all the questions, we'll respond post-webinar. If disconnected, you can log on again using the instructions provided in your initial confirmation email. If you continue to experience difficulty, please email webinars@ilfm.com. If you're seeking CEU credits for today's presentation, please refer to the link noted in the chat box. We will also email you this form with a recording within 2 business days. The program will be recorded. Our presenters for today are Judy Bicking and Matt Montgomery. As a 27-year Johnson & Johnson veteran, Judy received recognition in both credit management and procure-to-pay. After successfully managing and leading both AP and AR, she spearheaded the development of J&J's U.S. Shared Service Center, which consolidated the processing of 1.2 million invoices from 100-plus AP locations. The resulting increase in productivity, reduction in errors, P2P cycle time and costs, as well as an increase in compliance at all levels led to a world-class operation. Judy's next assignment was AP Global Director for J&J's European P2P project team. She designed and implemented the procurement and AP systems to centralize more than 100 European countries. Since retiring from J&J, Judy has been a sought-after subject matter expert, speaker, trainer, and consultant to all types of organizations. We have Matt Montgomery, who is the industry manager for accounting and finance for Perceptive Software and is responsible for leadership around the application of Perceptive solutions to finance, accounting, and procure-to-pay operations. Perceptive in 2014 prior to an 8-year career with its parent company, Lexmark International, where he was the global manager for procure-to-pay operations and America sourcing. During this time, he was also responsible for the global rollout of procurement systems, contingent labor programs, global agency and travel commodity, corporate social responsibility, and procurement operational excellence programs. This last time, I'd like to welcome our speakers and turn it over to Matt and Judy.
Hi, everyone. Thank you for attending this afternoon. We're really excited to talk about this topic. It's a great topic for all of us as we try to improve processes and away from the fire drills that happen more often than we would like. As part of Perceptive Software, we're trying to drive a lot of this behaviors through process automation, content management, intelligent data capture, just really looking at how we can take these procurement processes and make them predictable, more efficient, and to drive a lot of cost out of the business. So this has been a great topic for us, and we're very excited to have Judy talk to us today about this and eliminating the AP fire drills and getting this kind of work in front of our CFOs and getting everyone excited about how we can turn around and benefit the business with all the things that we're doing. So that, Judy, we're excited to have you here today.
Thank you so much, Matt. Good afternoon, everyone. I'll walk you through this process because most of us were promoted from within accounts payable or we were transferred from another area, like I was. I was in the credit department as a credit manager, and one day they walked up to me and said, "You're in accounts payable." And the title was "Go Fix It." So with AR knowledge and the "Go Fix It" as my direction, went into accounts payable. Just as a side, I really loved my very first phone call that I got to say the check was in the mail. you're in the credit department, you definitely have your financial management's attention all the way up through the CFO, because that is where the money is coming in. So they get a lot of attention, and what I learned very quickly was accounts payable doesn't. Yet, we have the largest impact into that financial statement. So as trying to go fix it and find the projects being stalled, I learned the hard way, by the way, that what I really needed to do was find why the CFO should pay attention to the accounts payable side of the business as much as the AR side. So we had to focus line where the budgets come into play, and stocks, they definitely care more about the accuracy and the timeliness of data that's going into the ledger affecting financial statements. I knew it could create better ROIs with a larger impact to that bottom line, so I had to do that through reducing costs, improve efficiencies. Discount's not a high priority, yet I know on the AR side it was, so I really had to look into why discounts, looking at from the accounts payable perspective. And cycle time has a huge impact on the discounts. Spend management. I'll talk about spend management throughout this presentation and hopefully drive home that that's what we need to get to. One of the things accounts payable really has to do is improve cash management. Cash flow, inflow, and outflow of the money. And one of the things we don't have is good visibility on our debt. So I needed to find a way to enhance that visibility. And all with that said, being compliant to all laws, regulations, and they're ever changing. Now, the problem with visibility is purchasing system, you have visibility if it's an upfront purchase order. You see the committed spend. But I have to tell you, in benchmarking and working with many companies around the world, 80% or more of AP spend is on a non-PO. So we got to change the way we think, and we have to change the way we work. And one of the things that we really have to drive home is we're not bill payers. So we focus on the invoice. We're focusing on productivity, on correcting the errors. We call putting out the fires, where all the noise is coming from. That urgent, got to get it done, right, drop everything, get this fixed. So what I mentioned is why I focus on the CFO is he's hearing this noise. He's hearing this noise about your department, and it is building a poor reputation. So we also have to turn that around as well. The future focus is got to be aligning with that CFO and their goals. Cost reduction. Look at best way to do cost reduction, no matter what best practice you look at and what surveys you read and what articles you've looked at. Cost reduction comes from eliminating the paper, bottom line. So what practices can I implement that's going to have that cost reduction? It's going to be through technology. As I'm painting a very vivid picture, I hope, that you have to see that our current perception is we're out of control. We're AP. Those people, you never pay bill on time. Because of the late payments, the errors that happen with the payments, you may even have gotten where you avoid your upper management. We're viewed as just bill payers. What I want to project is a future where you turn that perception around and you become the key business partner to the CFO. Streamlined processes, you're the source of information, and something that you can actually own from start to finish and control the process. I am focusing on the process because we all know it's not accounts payable. We people saying that. It's not AP. It's process. But that's what they think. And if you do the he said, she said stuff, you're going to lose ground very quickly, and battles will be lost. What you have to do is focus on the facts. an old TV show that was a detective show, and now using it as a commercial in today's. I think I saw it yesterday, where the FBI would be investigating a case, and as they interviewed people, and they'd be in the room, they'd turn around, they'd say, "Just the facts, ma'am, just the facts." And that's what you need to focus on. And facts are going to come from metrics. So we have a very out of control process, and the reason it's out of control is our companies allow maverick spending. Maverick. I can buy anything, anywhere, at any price, and because I'm very last minute, oh my goodness, I need this right now, we're also paying for rush deliveries. So let's change the way we think. Let's change the process where we can control it and start bringing procure to pay under control. Why AP? I know what you're thinking. Why AP? Well, honestly, it's because we're the ones with the pain. We're the last step of a very chaotic process, and if we fix it, nobody's going to, because they're going along doing what they need. It doesn't matter that they paid top price and overnight deliveries. That accounts payable. We've got to own it. We have to change the way we think. It's our reputation. So start with where the CFO gets their information. First, looking at benchmarking data, and I can tell you right now they're focusing on their competition. So whatever industry you're in, they're looking at the competition and what are they doing to get ahead. So data comes from many different sources, and they want to see that they are in the best quartile. Accounts payable, truly, we don't rank very high, and there's things that we look at. Invoices paid on time, your DPO, and invoice. Others they're getting their information is from CFO magazine, Forbes, Wall Street Journal. They own information that they get from the consulting firms, McKinsey, PricewaterhouseCoopers, Ernst & Young, Deloitte, just to name a few. They're also getting information from the audit departments, internal and external, because that highlights where controls and internal controls can be weak and need improvement. Are you reading any of these articles? Well, I'll tell you that I didn't in the beginning either, but I did find out the hard way why I should be doing this. I walked into my job, and on my desk was 11 copies of an article that in the CFO magazine sent me by 11 different vice presidents, because I had responsibility for over 100 companies in the United States and paying their bills, of which each had their own unique board. The article that was on my desk was about Ford, so you may know that's where evaluated receipt settlement came from. But the article that hit the journal in the CFO magazine was Ford reduces accounts payable from 404 to 4 over the weekend, and with evaluated receipt settlement. Now, prior to that, there was almost a year's worth of planning and implementing and basically telling their suppliers, you will not invoice me anymore. I'm going to pay you based on evaluated receipt settlement. You may have tried to roll this out in your organization and found that really the best match for evaluated receipt settlement is inventory. Inventory is great, but that's probably only 20% of your volume of invoices. Dollars, but only 20% of the volume. So, strategic thinking, strategic planning. What are your AP goals? Invoice paid on time and cost per invoice. Do you have current statistics? Let's tie goals to the CFO's goals. And I can tell you on the top of their list is reducing costs in the operations. Efficiency of the payment of an invoice from the time the invoice is created through the payment process, focusing on that. That efficiency, I want to use this quote that's in the red box. Gartner Group, and I'm quoting them, a 5% reduction in operating costs equals a 30% increase in sales in terms of effect on the bottom line. And I actually implemented this, and it is a true statement. It works. You can find the best way to decrease your process in getting the invoices paid. 10% reduction in efficiencies, you can have a major impact to the bottom line. You will get the CFO to listen to that. You will have accurate, available, and timely information, data, statements, debt visibility, and benefits. Now, I ask everyone a question right here when we say debt visibility. You know, I talk to some companies, and the new direction really is that I'm not even going to start the clock until the invoice is in my hand. So if supposed to continue to send the invoice everywhere but to the accounts payable address, or can you tape them on the side of the boxes, which most likely they're getting thrown out, not my problem. My problem begins when I have the invoice in my hand, and then I'll start the clock. Well, that your company doesn't know they have a debt until accounts payable receives the invoice. That's your cash flow. This is not really good thinking for the controller of finance and your CFO. So visual. When you go home tonight, you open up your mailbox, and in that mailbox are 9 invoices, 9 bills from hospitals, doctors, the government, anywhere possible that you have no idea you owed, and they're dollars. You manage your paycheck to your budget, and now all of a sudden you have 9 expenses you had no idea. How are you going to pay them? How are you going to manage your cash? Yet that's how our companies are managing their cash. Debt is a surprise, and it shouldn't be. We want to move forward to is providing that accurate, available, and timely information and start moving this process up front. Then we're able to capture cash discounts. Days outstanding, I wrote no surprises. Right now, that's where we're at. Everything we get is like, oh my goodness, we owe this money. Now I've got to back into approvals. I've got to find out where the general ledger number is. But I want to point out here the age trial balance. Do you look at the age trial balance? I find most AP departments don't even run an age trial balance. These invoices that are aging, you got them, but they're aging. They're growing older than the past due date, and you need to look at why. Because this most likely is highlighting your bottleneck for error resolution. It says that you've circulated because you're missing data to get it paid, because you can't approve the invoices. It's got to come from the requester, their manager, and their budget. In bins. And they're putting out fires too and handling things during the day that, you know, I'm going to get to that invoice, but I'll do it tomorrow, and it gets buried and they forget about it. So get a system that's also going to manage the errors and get them on track and get them corrected timely as well. And here's that then management I mentioned. This is the gold. This is where the real money is. Right now in that maverick, chaotic world where anybody can buy whatever they want, wherever they want, for whatever amount of money it is, and management is taking a look at the AP data, saying, what am I buying, where am I buying it, how much am I paying for it, and then strategically source that spend, get the best price, the best quality, and the best delivery. It means getting that thought of need through the organization as the important first step. Now up to the box on the right, I can cash discount a little bit here. This came from surveys conducted by the Accounts Payable Network. A 10 early payment equivalent to a 36% annual interest rate. How would you like to earn 36% against the money you have in the bank? I mean, most of us right now aren't earning anything. If anything, they're charging us for having our money, or we're earning a mere 0.5%. I just had bought a CD 6 months ago. I put $50,000 in it, and I earned $5 in 6 months. That's incredible. If I was able to get my invoices under control and that cycle time where I could take advantage of the 2% early discount, that's equivalent to earning 36% annual interest rate. These are kind of facts that will talk to your CFO loud and clear about why they need to get that maverick spend under control. You that in all the best practices I implemented, some are manual, some are process. The ones really worked is when technology helped drive that process change throughout the organization. So technology is the answer. Help you to focus on AP's end-to-end focus. The goal is let's get under control from the time invoices issued through ready to pay. This will help us transition accounts payable to best in class. It will begin to change your reputation. Reducing cost, as I mentioned, paper cost is the number one process. If you eliminate the paper, you will reduce cost. Now, it's also very difficult for people not to want to touch and feel that paper. So there is change management that you go through anytime you implement technology. But if you're prepared for it and people can see the real benefit of it, they will move towards it. Then you work on a no-touch process, looking at that cycle time. If I had the perfect invoice, and if it was done with a purchase order where it's been pre-approved, the general ledger number's been validated, literally from the moment I get the invoice, it could be a no-touch process. I'm getting that efficient cycle time, which will allow me to also take the discount. Again, it's going to calculate our information because accounts payable is actual spend. So even if we have a purchase order, it will tell you actual spend. I mean, many POs created for $1 because, again, they were in a rush, just wanted to get in there, and they really didn't care what it cost. So I pay less for my goods. We want to get software that puts us in control. But I learned finally that I just got to stop fighting the way the organization does their business. I have to find a process that works. And I know that I need to get rid of the maverick spending. So in order to do that, to look at technology, I need to look at technology that is going to turn that paper into an electronic document. The technologies is workflow and imaging, and if we add intelligent capture to it, I'm also eliminating the rekeying of data that's already been entered into some type of system. So the best practice is eliminate the paper, eliminate manual keying. Talk in it about there are other best practices that helped eliminate paper. EDI, getting the invoice in electronically, supplier network, the evaluated receipt settlement that Ford had brought to us as a best practice, and the purchasing card. Well, there are limited suppliers who can actually participate in those best practices. The other is, as accounts payable may initiate or be involved in rolling these out, we have no control over people using these best practices. P-card program is only as good as the managers who actually use it to procure goods. I talked to managers who really didn't understand the program, afraid that the card would get misused and their name was on it, that they might be personally liable for the items purchased on the P card, and so they would use it. They got it sitting in their wallet, don't use it. Evaluate receipt settlement, again, limited to mostly inventory, and that's because of our sales and use tax and VAT laws. So, the limited number of suppliers and the paper that we're trying to turn into electronic, and by the DI was like a one-on-one relationship. I couldn't even get massive production out of that. Still 80% paper coming into the departments. So what am I going to do? How am I going to control that? Way to receipt settlement was also only good if the buyer actually would implement it with their suppliers. They own those inventory suppliers. They don't want anybody talking with them unless they're initiating that conversation. And others were afraid to move to evaluated receipt settlement, mainly because they don't really understand the benefit that they now spend on spend management. So we need to control the process and not rely on other departments to make it successful. So it looks like we've implemented projects that didn't work, but it's basically because we had no control. We need to be able to trace the invoice from the minute it's received. And I'd like to say as close to the creation of that invoice as possible, where it tracks the history. Some of our reputation comes from people assume we buried it in paper and we can't find that invoice when they call about it. Now, I had 90 processors in the department. It could have been on one of any desks. First, we all sort alphabetically. Well, at least I know it's on these couple of desks. But they have hundreds of invoices on their desk, and I'm going to take time to actually flip through them one at a time, looking for that one invoice, or do I ask them for another copy? Making it sound like I'm out of control and the process is chaotic. But we're also dealing with duplicate invoices floating around. So perception is that we've lost invoices. If we can see from the minute the invoice is created, there would be no lost invoices. Also, I'm going to be able to route it and get it into the right hands immediately, and want the history of the system to show me the true bottlenecks. This is the game changer. Because all that noise that the CFO was hearing, all noise your management hears, that you hear, is if an invoice not getting paid, it's late. You got it today, but all of a sudden it's AP's fault that it hasn't been paid on time. The system will show the true history of where that invoice was routed to, how long it sat, and get bottlenecks cleared so they'll go through. The system needs to have internal controls built in to protect the cash. Now here what's really important is don't the system, change your process. Those internal controls are built in, segregation of duty, actual authorized signers, escalation, storage and retrieval of data. So we want the ability to capture invoices the same day as it's issued, and I want to know where that invoice is at all times. We want to have easier and more efficient audits so they have fewer fines, penalties, and interest charges coming in. We're becoming a valued, trusted business partner to CFO and the CPO. I want to talk about the CPO for a minute. Before you take management to the CFO, you should have conversations with the CPO because they know what they don't know. Meaning, if you very few purchase-related invoices going through accounts payable, what they think is the bulk of what's being purchased. You need to show them the non-pay spend in the accounts payable system, using metrics, reports, and what the direction that you'll be taking. Because you want to get that CPO on board and help sell the process for the future. I'm going to now start moving your reputation from bill payer to a valued, trusted business partner. I got to tell you that with this technology, intelligent workflow, data capture, where the invoices at all times, there were some hidden benefits that I didn't even realize until one day I realized we weren't working around a closing schedule. closing became a non-event because it was in the system from creation of the invoice. So accruals were made if it was in error automatically. We didn't have to look for them, write up journals, and mentored. This created a less stressful work environment and increased job satisfaction. How do we get the CFO's approval? The CFO to understand we don't just pay invoices. We have so much more to offer. You'd point out some of what do. Largest input to the general ledger. And with the new laws and regulations out there, they are definitely committed to wanting the ledger to be as current and accurate as possible because it has the creation of monthly, quarterly, year-end, the financial statements. CFO has the largest responsibility for cash, internal control, and you need to eliminate fraud. I mean, hopefully you are very up to date on the OFAC, the FTO, and the SDN list to ensure that we are preventing fraud from happening in the beginning. But fraud also goes beyond those doors. And if you think fraud's not happening in your organization, that's a problem. Home now, your email, phone calls, they are trying to scam the money from our organizations. And you need a really tight, compliant process to ensure that you're preventing fraud. Some other things that we need to be compliant to is, again, we don't just pay invoices. Compliance. An OFAC, sales and use tax, VAT reclaim. That one always amazes me because the last tax season that was completed by the governments, $4 million was left unclaimed. And most clients I work with, they tell me they're not looking at dollars and outside the U.S. to reclaim VAT because it's too complicated. So we're leaving our dollars on the table, and we need to look at that. 1042, Oxley, SG, unclaimed property, parent reporting, which has grown to 9 or 10 states today. And then on top of it, depending on the industry you're in, there are very specific laws and regulations that you need to comply to. The CFO knows these things are getting done, but do they realize that all of these compliant areas are being done by accounts payable? It really pays to also take these opportunities to educate the CFO. All right, so before we go to see the CFO, the approach, we've got to turn around that the invoice should not be the first trigger for a debt owed. Like that question I asked you about going home tonight. This is what we need to say to the CFO. Is this truly how we want to operate the business? But you're also going to show them how to turn this process around. And the best way to do that is, first, you have to map your current end-to-end process. I know this is painful, and it's probably the most widely skipped step that happens, but it is one of the most important steps. In that process, you need to map the PO process. It's going to be much more simpler, direct, and an upfront purchase order. I've learned to be very careful with the words I choose, versus a non-PO or your in-house invoices. In-house invoices is a key area too for fraud, so you need to make sure that there is backup for those kinds of payments going out the door, as the IRS is really getting tough in these types of regulations. You want to identify your project team, and when you identify the team, please train them in managing a project, because again, as we are promoted up through the ranks, that's something that we typically don't get formal training, and that's really going to be important. Identify the team. You need to include internal and external customers on this team. If there are any departments that you need to have pre-talks with, not only the CPO, maybe some buyers, acquisitioners, I like to pick the ones who complain the most about our services. Get into that circle, because just mapping end-to-end process is a good to start converting the process, getting change management, and also if you pick your toughest customer and bringing them in, you don't leave any stones unturned. You actually are mapping out everything so that when you put in the new technology, nothing will be lost and you'll have a successful project. Then, if you haven't done this already, you've got to do your homework. As you also react to the noise, a lot of your time is spent on small issues, the noise, but it's not really what has the largest impact to you reducing your costs and having better efficiencies. So what we want to do is get ourselves in a position where we can present actual data using metrics. This is help educate. It's going to help focus on the process. By focusing on the process, the realization is it's not the people, it's not accounts payable, the process is broken. So your homework, you have to choose key metrics for your business. They need to stand the test of time. They relate to the mission and vision of your company, and then hopefully you have a mission and vision within your accounts payable department that ties to that company's mission and vision. The key to doing all of this is capturing your baseline. You know, many times we have actually had successful projects, but perception is that it wasn't, and you have no way to prove it. If you capture the baseline, you can always talk with and the facts will show here's where we were, here is where we are today, and see your metrics improving, your costs going down. Doing your homework, I'm going to use a metric that most of us use, and that's invoices paid on time. And by doing your homework, I need you to get into how is that metric created, how is it actually calculated, what's included, and then when you have your bench line, like where are we today, you're going to also be creating your goal. Where are you going to be tomorrow? Now, I had a global CFO who basically said every goal has to be 100%. And if you're not striving for 100%, I don't want you on my team. And I told my controller that I'm going to go before the CFO and say invoices paid on time. Can it really ever be 100%? Can your paid on time ever really be 100%? Okay, I know you're coming up with a lot of excuses, but how about in a perfect world? Up purchase order, all approvals, general numbers valid and enough budget money to cover the expense. No mismatches, the receipt is done, the invoice comes in, perfect match, it comes in electronically, lifted by workflow, right through the system, set up for payment days and weeks before the due date. Capture discount, a perfect world. Can time be 100%? Now, I've heard some of you from no, it can never be because all these things are wrong, this process doesn't work, to, well, maybe, sure, in a perfect world. If everything is perfect, in a perfect world. To my CFO telling him that my perfect score for invoices paid on time was 98%, and it never could be 100%. My controller said, I'm not putting my name to that. I don't even want you to tell the CFO that, but I had to. I did my homework. That's the type of in-depth homework I want you to do. I said to the CFO, and for you to use as well. I want it to be 100% because sometimes the products, the goods, and the services that the supplier gives us doesn't work, doesn't meet requirements. don't want to pay the invoice. I want to hold it until the issue is resolved. One was a whole production line that didn't work. Not only did I hold the invoices for one company, I held the invoices for the other companies as well, so I had enough financial leverage to get that company to come in and fix that production line because they weren't paying attention to the complaints that it didn't work. But once we put enough financial pressure on them, they came in. I used that as an example. There are also times when if you owe your suppliers enough money and they paid their tax bill, they will tell the IRS that to place the levy on you, your accounts payable. So we use their invoices, and clearly now we don't pay the supplier, we pay the IRS. Now, the work was, how much of that don't I normally pay based on history? And it was roughly 2%. So my perfect world of invoices paid on time was 98%. So when you look at your metrics, I can't tell you how important it is for you to know that data inside and out, upside down. How many invoices do you pay? How many are PO related, non-PO related? How many are inventory versus non-inventory? How many are $1,000 and under? In a process, what does it cost you to handle an invoice versus what is the cost for an invoice that once you've scanned it, imaged it, no touch, automatically goes through, it's up for payment? What does that cost? You need to do those types of metrics in order to sell these best practices and now get the CFO behind your policies and procedures along with the CPO. I'm saying accounts payable, you need to be the leader. You need to stand out in front. You need to take ownership. You need to lead the change. And so if you do your metrics, you do your mapping, I'm sure you'll find that what I found was the best practice that actually turned our accounts payable around was a workflow and imaging system. And I say upfront workflow and imaging system because some use it as a back end. So once you have done your homework and you want to convert that paper, that you can control the paper being converted to an electronic document so that you can start improving your efficiencies and reducing costs, you'll need to select a supplier. Build a solid business case with a really strong ROI. And I'll tell you, eliminating paper, the cost savings you have is tremendous. Then you go on your discounts. You're going to have a really good, strong ROI in there. Develop a solid implementation plan using that current process map. This is what's going to keep you from having scope creep and deadlines, which, believe me, everyone thinks delayed deadlines means something's wrong. See, I told you it wouldn't work. I will highlight change your process, not the system. It's built to give you the best productivity efficiencies that can be had. Promote and educate this system. And if on the day you said you're going to go live, there will be some stragglers that you have to do. Make a little to-do list, get it done, but do not delay your go live date. If you use that current map to make sure that the new system covers all areas, it will identify internal and external users, system connected to, and all the processes, so you won't miss any key important steps. Next thing that I want you to do once you've done all that is then you're going to toot your own horn. You're going to make sure that getting the credit and change that reputation that accounts payable has from out of control, chaotic, that business partner by scheduling quarterly meetings. I know we hate to present, but I got to tell you, you just got to practice, practice, practice. And if you've done your homework and you know the data inside and out, really presenting becomes less stressful because you know what you're talking about. You're the expert. You're going to present this information from the CFO's benefit, not your benefit and how it's going to improve your process and make your life easier, but how it's going to affect the CFO from the financial statement and a cost savings perspective. Remember what your current cost is today versus that baseline, because you're going to show it's it's improved. Now, there may be times when it goes up and down a little bit and up and down a little bit, but the overall is up. It's improving. The downflows could be vacation times, snowstorm, hurricane, seasonal. You might have more volume during certain seasons, and you can explain down, but you're going to show that the overall is moving up and in the right direction. Try to make all your charts in a positive, not invoices not paid on time, but invoices paid on time. So make sure that you're presenting the statistics in a positive way. You will customer satisfaction, so you want to save some quotes and copy them into the presentation. Key to continue to make your CFO a champion for the technologies. You need their support as the system shows the bottlenecks, especially around PO versus non-PO and its benefits. You want to get the continued commitment to the process. Approvals prior to purchase. Move accounts payable forward. Get hedging and workflow. Negotiate your prices in the future. A valued business partner to the CFO and your entire organization. You've done it through facts, not finger point back. You have just proved where the process needs help and get those fixes implemented, accepted, your department forward. So make sure to book these meetings and show everybody what a great job is going on. At this point, we're going to up to any questions that are out there.
Both Judy and Matt, if you haven't submitted your question already, just simply enter your question in the chat box on the right side of the screen, and we'll make sure it gets asked. First question is from Abby. Is Money Magazine a good one to read as well?
Oh, absolutely. In Money Magazine, they had some really great articles on SG and how easy it is to actually follow the reclaim and about some fraud that was taking place, so how to put in segregation of duty. So, yes, the most important thing is be informed.
Okay, the next question, how do you recommend starting the map of end-to-end process? Should the focus be on time spent or number of invoices?
Actually, I would even do it at a more micro level. From receipt of invoice and where is it going? We're going to need to put volumes to those processes, but the metrics should come out of the process flow, not start with the metric.
Okay, thank you. The next question, when you were talking about mapping the current end-to-end process, could you please define an in-house invoice?
Sure. An in-house invoice should only be used when the supplier will not create an invoice for you. So it's an internal form that needs to be routed, signed, and coded with an explanation about what the payment's for. Let me use the tax department. They're filing sales and use tax. They need a check because they're paying the use tax. They would create this internal form saying, pay the IRS X number of dollars, and it's for sales and use tax. And you would create the payment. The IRS doesn't bill us for our taxes. So taxes, donations, type of thing, licensing, all could require an internal check requisition.
Great, thank you. Supplier portals, can you define what they are?
Yes, you want to take that?
Yeah, the supply portals are really where we're going to communicate and provide some visibility to the supplier. So suppliers, if you think about the number of phone calls you get and the content of those phone calls, they're asking, when is a invoice set to be paid, and they get to be robust is where you would help or allow them to manage their own information. As people move into different jobs, there might be different contact information. They'd be able to update their payment methods or their banking information or whatnot. But it's all of that information find that you're ticketing back and forth either manually today or where it's sent in through email or handed to somebody and they're rekeying it into the system. It's the automation of all of that activity.
Great, thank you. How to stop the negative finger pointing?
Well, actually, I think the best way to do that is to not even respond to it, because if you do, that's where you get into the he said, she said, and you'll never, ever come out a winner. You look defensive and guilty. So really what you want to do is, again, that piece of homework, really knowing your information, sticking to the facts. But in order to get there, when you're with that finger-pointing person, I went to a listening mode. And, you know, my boss had a great saying, Judy, bite your tongue till it bleeds. So there's a visual for you. Hear what they have to say, and then tell them that you're going to consider what they've said to you. So you walk away, not responding to that finger pointing yet. Go out, get your facts, get your metrics, benchmark, get best practices, and then go back to them with a solution. What I found was they turned around a little faster and easier because their thought was, she listened to me first, not got right in there with, yeah, but it's this way or that way. Yeah. So I found that process really helped.
Yeah, I'd add to that a little bit. I mean, we would always say it's about the process, not the person. As much as Judy just described, if you're being fair and attacking the process, and you need to understand a little bit of the political motivations behind. I mean, if people see technology as something that's eliminating their job, they're going to be much more sensitive to it. But that's not our intent. Our intent is to always to optimize the unnecessary tasks so that we can free up time to do all the work, because there's more than enough work available that needs to get done.
Okay, the next question, some examples of cost savings we could look at when preparing an ROI for going paperless, other than postage, paper savings, filing time, invoice pulling time. Is there anything else?
Oh, boy, you know what? There's about 20 points of cost savings. And as you do the current map, you're going to be highlighting all of those places that can be saved. And, you know, it's not just about filing and retrieving the files, but it's also the storage cabinets, the material, the space that you're required to maintain that data. It's 7 years or till IRS audit, which could be a 7 to 10 year window, times your volume. Where are you storing all that paper for all of those years? And retrieving it isn't that easy, and that's part of the frustration, you know, of this system. So handling the paper, the time that it takes for that paper to go from desk to desk to desk until it's approved. You can capture unearned discounts as part of this as well.
Okay, the next question, what metrics in addition to invoices paid on time do you recommend?
Was it other metrics? I'm sorry.
Yeah, metrics. In addition to invoices paid.
Okay, for me, the two most important is either invoices paid on time, the cycle time, or a touch it once. Was the invoice touched once? Not, because your goal is to touch it once. They're going to want to look at metrics that support that. Again, types of invoices, because they may have different processes. A legal invoice versus an inventory invoice, so you might want to break it down. It depends on your industry and what kind of volume you have. Let's see, and then dollar values. You're going to start finding 80-20 rules that I never used to believe so much in the 80-20 rule, and now I live by it because I've just seen it proved so many times. If you highlight in that process map that 80% of something is happening, that's the one you want to focus on first, that process. Then redo your metrics and find out what your next 80-20 rule is.
And so to add to that, as we were looking at the metrics for paying on time and then trying to drive the process efficiency, we found that we also then started to look at voided invoices and duplicate invoices, and so there were other process inefficiencies that were coming out of that, where suppliers are sending an invoice into the accounts payable department and then direct to the user. The user was then sending it into the accounts payable department. I mean, lots of things like that you can drive the nation of whether there's potential for duplicate payments or late payments, extra work that doesn't need to happen.
What's the date invoice versus the date you received it, and what's that gap? For some companies that allow the invoice to go back to the requisitioner, that can be a huge gap, and I mean months long. And, that would be a key identifier. The number one bottleneck to accounts payable for most organizations is they don't have the invoice. They don't have the invoice, and until accounts receivable calls with a past due, they have it. So you're tracking the invoice after it's already past due. And again, that's what gives you that reputation of being out of control. So I would definitely look at that metric as well and find out where's that invoice going so you can get control of it.
What workflow and imaging tools would you recommend?
I would definitely say, Perception has some very good solutions in that space. What you're looking for, though, in a solution, and to be a little agnostic about it, is to talk about things like our intelligent capture product, which will understand not only the document as it's being written, but looking at your ERP and saying, okay, is there a PO for this? What does it match to? Does it suggest things to you to sort of help? But a lot of that information in the flow can be very important. And there's other solutions as you look at it around, there are supplier networks out there. You only want to evaluate how many of your suppliers would be aging enough to go after a solution like that versus how many of your suppliers you're going to get a lot of paper or email in that you need to process. And we definitely see that there is a mix of that, and as much as you can look at those solutions and kind of help manage the content within it. We definitely have a content management solution to hold the invoices and tie them to the purchase orders and manage all of the images that go along with it. But those are the areas that you're really looking for to cover this space.
Also, I see a lot of small and mid-sized companies online with us today, and you don't actually have to purchase a mapping tool. We first started out, and I noticed a gal that I worked with many years ago online, and she probably will laugh when I say this, but our first mapping projects were done with stick figures. 3 little squares meant an invoice, and we mapped out the microprocess of what was going on to identify what were our real problems versus the noise. So you can, if you can't afford to buy software to do this, this is something you can do with sticky paper and a whiteboard and the core people in a room and map out what's really going on so that you can get hands around the process. Then look for that technology fit that's going to remove those bottlenecks and pain points.
Next question we have is, what can you do to stop departments who receive an invoice and then request PO instead of do a PO before receive the invoice?
I ask you to read that one more time because at first I thought they were talking about the invoice comes in and then the purchase order was created.
Sure. What can you do to stop departments who receive an invoice and then request PO instead of do a PO before receive the invoice?
Okay, that is what they're saying. That's why during the presentation I used the word upfront purchase order, because a lot of times if you just put out a purchase order policy, they're not going to change the way they procure goods. They're going to procure their goods just the way they've always done it, get the invoice in, and then do what I call backing into a purchase order. That gains nothing. And the purchasing department now they're also frustrated because they're doing what you call busy work. There's no value to them because it's already been bought and paid for at that price. So we've got to talk about turning the organization around. When we talk about spend management, that's the reason we want purchase orders. I want to know before you need it what you need, so I can go out and get the best price product quality, but definitely the price negotiated because we're paying top dollar for everything. You can have a few wins with a commodity or two to prove that spend management works and why we need to move to an upfront PO. That's going to take the CPO and the CFO's backing to do that in order to convert. the company way of procuring goods. This is something that can come after you've fixed the other woes that are going on, and getting your hand on what are we buying, where are we buying it, and how much are we paying for it. At that point, it's going to take the company saying this is the way we do goods. Letters can go out to the supplier saying that please only accept a purchase order prior to putting through if you want paid. That's we're going to do business from now on. This is where Ford was very strong in the way he told his suppliers how he was going to do business. So you're going to require a purchase order, upfront purchase order, and allow procurement to do their job, and that's to source the product and get the best price.
The next question is if you could define evaluated receipt settlement.
Yes, okay. Evaluated receipt settlement. I will use inventory as an example because it's well controlled, monitored, and counted. But what Ford did was he knew that he had to reduce processing costs. Remember that 36% annual gain, right? He knew he had to do that. So the only way he could do it was to say, I'm going to procure all my goods on a purchase order. If you accept my purchase order, I've got the right price on the go, the items that I'm buying, who I'm buying it, the description. And then when you send it to me, my receiving department will meticulously count those goods. I'll take the receipt times the price on the PO, terms on the vendor file, and I will issue a payment. I do not want an invoice. So he actually he eliminated the paper. He eliminated the invoice. His suppliers had 6 months to convert to evaluated receipt settlement, or he would find another supplier to work with. So it was major. Most of the companies around the world, except the car industry, because Germany and everywhere else, they've adopted this evaluated receipt settlement. We've used it for inventory because it is so well controlled and maintained. But that's normally only 20% of your invoice volume. So you've got to go after another way to convert that 80% of paper that's coming in if you use it. No buyer's cooperation, the project will not be successful.
Okay, the next question is, how often would you recommend that a department should follow up on unclaimed funds once the payment has been remitted?
Okay, unclaimed funds. I actually am training on unclaimed funds that you actually start looking at this stuff within a month of the payment not being cashed, because it's already highlighting that there's a problem. The supplier has not cashed the payment. So you want to start looking at it while the facts are available. But after 6 months, the trail is old. The government requires that you really do your homework and try to find who you owe to. And if you can't find them, you have to escheat it to the state in which the payment was made. There's a lot of information out there about that. If you need more, maybe you could email us so we can direct you to some good articles.
Thanks, Judy. How do you control the maverick spending if the upper senior management is the culprit?
This is where you really need your facts about what it's costing them to allow that maverick spend. It's a tough transition. So I would go there if you really have your AP process from invoice to payment well under control and monitored so that you can use the facts coming out of the system to then go after the maverick spend. But your way of getting control over the maverick spend is turning that paper into an electronic document, manually routing it so that the AP process is really well controlled. Then go after how we're spending, show them spend management and the benefits to it.
Great. Thank you, Judy. So the time we have for today's program. If you were able to ask your question or have any more questions, please email them to webinars@ilfm.com. If you could please fill out the evaluation form that will appear once you close out of the webinar so that we can better serve your needs in future conferences. Thanks, Judy and Matt, and to all of our participants for a great webinar today. This webinar was brought to you by ILFM and sponsored by Perceptive Software. Thanks, everyone, and have a great day.